Welcome to Adyen Presents Embedded Finance, real talk for SaaS leaders on embedding payments and financial products. Software platforms today are no longer just about software. Winning platforms embed payments and financial products like business loans, accounts, and cards to become full-service operating systems for customers, building loyalty and new revenue streams. Now, the opportunity is clear, and we've heard much about it, but tactics are largely undefined still. And that's why we're launching this podcast, to hear from the platforms and experts shaping the strategies. This episode unpacks the embedded finance opportunity for SaaS platforms. I'm joined by a major leader in financial technology for small businesses, SumUp, and Max Zevin, partner at Boston Consulting Group, driving their embedded finance initiatives for North America. First up, Max.
Max, welcome. Can you tell us a few words about yourself to start off?
Yeah, thanks for having me. So, as mentioned, I'm a partner at the Boston Consulting Group. For those of you that don't know BCG, we're one of the world's leading consulting firms across a whole bunch of different industries. And I selfishly think we have the leading payments practice globally, although I'm sure other consultants would say that as well. I've been in consulting for almost a decade now, and also spent some time working in payments and industry as well, at Bank of America. And I really work across the value chain. So I work with acquirers, I work with software players, fintech. I work with payments network. So, you name it across the payments universe, you'll find me in and around the topic. And of course, for this specific topic, embedded finance is a massive discussion topic, a massive investable theme in the US and Europe. And so it's something that certainly a lot of our clients are paying a lot of attention to right now.
Absolutely. And can you tell us a little bit about BCG's relationship to embedded finance? Like what's the type of work you guys have done in this space?
Yeah, it's a great question. So embedded finance is in its early days. It's certainly we've seen it move from emerging to this sort of growing trend. But a lot of our clients are still trying to figure out the sort of, what is this? Like, how should I think about it? What's my reaction function, whether they're an investor or whether they're, a fintech or a corporate or a software player. And so what we've been doing a lot of is actually helping them figure that out. So, what's the market landscape? Where do they fit? What's the so what for them strategically? And then we help them often set up like what's their operating model. So do they partner? Do they build? What pieces of it? What does this look like in 5 years and why? What capabilities to roll out, et cetera.
And is there a common denominator in the so what? Or do you find that every outcome is sort of unique?
Yeah, it's a really good question. I think there's a common denominator in the archetype of the player that we work with in the so what. So, like for banks, like we've had a number of banks that we've worked with that have thought about, looked at either building or partnering embedded finance capabilities in the back end. And so like there's a very clear sort of so what archetype there. For SaaS platforms, there's another type of so what archetype, which is like, this thing is here, right? Embedded finance it's a durable trend. It's not going away. And so often the question is how, not if, And then, for networks, there's another one, which is like, how do I facilitate this and be a part of different flows potentially, et cetera, et cetera.
And who do you think should be most afraid with the rise of embedded finance?
It's a great question. I think it's really easy to say banks, but I actually won't say banks for a couple of reasons. Like, I don't think that embedded financial products, they're really targeted at small and mid-sized merchants, which banks have a pretty limited footprint in serving the exact niche that embedded financial products serve today. Bank serve most of these merchants reasonably well. But again, I think it's easy to say banks because banks have traditionally owned the products that we think about. The marginal impact on the banking industry, I think, is reasonably small in the near term because of the relative scale of embedded finance versus small and mid-sized banking. So similar to like what we've seen in buy now, pay later on the consumer side. Like it's a major durable trend, but banks aren't running scared of buy now, pay later players because they're only 3 or 4% of consumer spending. So the same thing is playing out. It's the pace of embedded finance that matters there and the long game. In the near term, though, I think that the traditional sort of like what I'll call in air quotes legacy merchant acquirers are the ones that should be running scared. Because, if you think about payments acceptance and merchant acquiring, 15 years ago, it was enough to accept payment. And now it's not. Now accepting payments is commoditized. And what are the value added services, like, all the basic that are now fraud, APM acceptance, multi-country, et cetera, debit routing, like all those things are table stakes. And now it's what's the next set of VAS that you can offer that really differentiates. And I think this falls in that category.
Yeah. Yeah. And of course, we've seen lately in the industry a rundown on cost almost to zero. And there's not much more you can go below that. You just, you're subsidizing.
It's exactly right. And so then, where you earn the marginal dollar is you earn it on stuff like this, and you earn it on, expanding your VAS in every which way, frankly. And this is a huge piece of it. It's super sticky revenue,
It's really interesting. Hey, we published a joint report not so many moons ago, and we said the market right now is worth $185 billion US, which is of course a fantastically large number. Can you help us unpack that a bit and how we think about it?
Yeah. So it's a large number. It's also helpful to note that like we published a report a couple more moons ago. I think it was 2022. We published the first version of this.
Yeah.
And then the market was actually, I think we said 110 billion. So it's actually grown by, call it 2/3 in the past 2 years, which is a pretty fantastic growth rate. The reason for that, I think, is because if you think about the core components of embedded finance, so you think payments acceptance is like the cornerstone, merchant cash advance or embedded lending, deposit and savings products, and then cards and issuing. Each of those today globally has absolutely massive TAMs. Like when you add them up, they're in I would argue probably the trillions of dollars globally. And so the share of that embedded finance can address, frankly, just continues to get larger and larger, both as, the capabilities around it get more institutionalized. And frankly, as more small and medium-sized businesses go towards SaaS and software providers, either horizontal or vertical. So I think we'll see it continue to grow even beyond what it is now.
Yeah. And we've seen also, of course, since SaaS popped up, that these margin pools, they quite naturally consolidate, right? Because one offering just becomes more differentiated than another. And if we were to open a barbershop together, that'd be like a de facto software, maybe 2 or 3 options, but definitely not 30, right? At maturity. Do you think embedded financial products will be an additional accelerant to that process?
That's a really interesting question. On your first point, like, it's really interesting as you see this kind of consolidation in the margin pools of SaaS, because you start to see like 70% of a vertical owned by like 3 to 5 players, and the other 30% is this long tail of 100. And so I think in embedded finance, you're going to see the same trend on the provider side, because like these products and some of these products are getting pretty institutionalized in their scale. Like some of the lending portfolios up there are in the low billions now, which, by big bank standards is pretty small. But if you think about $1 billion of loans, that's a lot of small businesses or medium-sized enterprises, right? Every year that take $50,000 or $100,000 loans. And so that implies the need to have like industrial strength scale behind these products. That implies the need of capital and investment and smart software dev, good risk management, blah, 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 right? All this stuff. And that stuff means that you're gonna basically have a couple of scale players, I think, dominate the provider landscape. I think from an actual product offering perspective, though, I think what we're going to see is more specificity. Like we'll have these sort of generalized products, right? You've got payments is a no-brainer. I think working capital lending we've seen take off like wildfire in a space, and I actually wonder what the growth path will be of that, because there's a ton of runway. But lending businesses always have their own elements of risk. And then cards and deposit and savings accounts, we've seen adoption in patches, and I think there's more to come. But I think what will be the unlock is as players start to verticalize those offerings, either in the marketing and the packaging or the actual product spec. So like, where is an installment loan better than a merchant cash advance and why? Where can you start to embed like equipment or leasing or something like that, so that you actually start to get like real vertical differentiation in the products? And that's when, if you're a small business, like, if we started a coffee shop, it's one thing for us to get an embedded loan because it's convenient, it's easy, and we have no cash flow history. So like, great, those all make sense for us to go buy a bunch of espresso machines. It's another to get a secured loan where we actually finance some of that really, really expensive equipment, where it's lower risk, it's lower cost to us, and it's lower, it's a lower risk to the actual provider. So
Yeah, and
I
it
think
lowers
that's
the barrier to entry.
exactly.
That's the magical bit. Yeah,
Yeah.
that's interesting.
Yeah.
Do you have any personal convictions on what you think the next likely financial product that is embedded will be? Because I think we're familiar with cards, bank accounts, lending, MCAs. But is there anything on the horizon you think that's especially logical?
That's a really interesting one. I think it depends, it's this blurry line between what do you call an embedded financial product and what do you call, an embedded payment product or another value added service. Like, that's a really blurry line. And I think it depends on how you think about that line. So like, is payroll a value added service that lives over here, or is payroll embedded financial product? And
That's
so
something every small business owner has to think about. So
exactly, and same with like ARAP, like B2B payments, again, taking our coffee shop example further, like, we have to buy beans, like we're getting invoiced for that and we're paying someone for that. And today, ISVs and SaaS players are providing that service. And so, do you wrap ARAP reconciliation and other types of payments in there? And then you do virtual cards through that. And so,
yeah, there's
I think
actually, talking about that, there's a really interesting dynamic, I think, that will happen over the next 10 years with these, where the horizontal players and the vertical players meet. Because this
Yes.
example you just mentioned, you could argue that a vertical player just includes it in their own offering, and a horizontal is trying to go, who do you think will win in the end?
Yeah. I think that the horizontal players face a choice right now. And I think we've seen, at least in the US and parts of Europe and the UK, this play out. You have a set of what I would call like horizontal players that I would argue have already won. Like, whether or not everybody knows they've won or not, like, they've won. Stripe, I think, you guys are in there. Square, Clover, like, these are some horizontal ISVs, PayFacs, and acquirers that I think have just already won. But, and here's the interesting nuance, like, all of those players are verticalizing. Again, like, you guys can't effectively serve an industry by just saying like, oh, we're going to do card acceptance. Like, enterprise merchant services is way too complicated. And same with Stripe. Like, at this point, Stripe is a reasonably verticalized thing built on some amazing horizontals. So,
No, I was going to say, I'm thinking more about, in the end, a player like a QuickBooks or
yes.
like a Lightspeed, they're both trying to be the command
Yeah.
center and where we run our coffee business.
Yes.
And they can both do ostensibly what the other can. Who wins there? That to me is an interesting movement.
I think it's the vertical players.
I think so too. That's a short conversation then. Okay.
Yeah. It's 100%.
Why? Convince us. Why the vertical players?
Preach to the choir. You got it. Look, I mean, it comes down to like, the vertical player can be the operating system for a set of businesses, and that's incredibly, incredibly tailored. Like, the horizontal player provides a use case and is trying to expand out from that use case. So it's a question of like, are you the OS on which you build a bunch of use cases, which is super tailored to one thing, or are you the use case?
If we ran one of these horizontal platforms today, what do you think we should do? Because surely we haven't lost yet, right? There's still time to fight. I think, what would you advise them?
It's a great question. I would advise two things. So one is like, and a lot of them are doing this already. If you're a QuickBooks or someone, like your game is that you can provide your use case to the vertical players, right? So it's a channel strategy question. You can provide your use case to the vertical players better than anyone else. And so, like, are you the category killer in that use case? I think that that's something that we're already seeing play out with channel partnerships, certainly in tax prep, payroll, ARAP automation, invoicing, like that's already happening.
You have to make it so well integrated that it's not worth disintermediating you and building it yourself because it works
Exactly.
so well.
Yeah, exactly.
It's defensive, but it's probably successful.
Yeah. And then, I think like at the margin, it's, you play the defensive play and then you figure out, what are the adjacent use cases that you have a right to offer. And then the real tough question, which I think is where you're going, is like, are there verticals or areas where you build some level of differentiation, And I think that's a really tough one. Like, how do you go from, being the broadest possible offering to like, I'm going to be really broad, but build some differentiation in these three things? Because at the end of the day, there's an operating system out there that works for it.
I mean, we will probably live to see it happen in the market. So I can't wait to see what happens next. Just switching gears slightly. In our report, we wrote that over 50% of SMBs are likely to adopt what we call a full suite of embedded financial products in the near future. Can you talk a bit about what this full suite looks like today? And then as a part two of that answer, I'm personally very curious if you believe, like I do, that there is a chance that through software platforms, traditional banks can be entirely disintermediated in a time span of 10 years from small business banking altogether. Two-parter. Thank you.
Two-parter. You got it. Okay. Part one, and then we'll come back. So
what's the full suite today, essentially?
Yeah. So this is where I think like embedded finance gets cool. And this is where I think we're on the bleeding edge of it still. Although, you may argue you guys aren't on the bleeding edge of it. I would argue there's a lot of people that have yet to adopt like what good looks like. Okay, payments acceptance, that's a really clear one. That I think is a trend where a ton of SMEs are already adopting payments acceptance through their SaaS player, ISV, whatever it is. That's like the anchor product of all of it. Where this gets really interesting is with payments acceptance, you can do cash flow based underwriting, right? Cash flow based underwriting means you can either underwrite to more people or you can underwrite more cheaply to someone. Again, theoretically, I think now we see it often as underwriting to more people, which is, I think, quite a useful use case. Okay. So those two, I think, make a lot of sense. What gets kind of fun is when you add deposit accounts, you can now link the payments acceptance to the deposit account. That can be your settlement account. And you either get cheaper pricing, right? Or you get a bundled price or something. And so you actually make it as a small business a little bit better for you all around. You now have funds in that account. So maybe that helps again with a loan. And you can also add a high yield savings account. So you get money in, you pop it into an interest bearing account, sits there, you can use it, you can cash it out, et cetera, et cetera. And then you can also use cards either to borrow or pay via debit directly off that or charge card. So where this gets interesting is, in the same way that banks serve consumers and small business today, like you win with an integrated offering. And I think we're in the really early days of that. And I think that's why we'll see a lot of adoption over the next like 5 to 10 years.
Yeah. Amen. I think right now what you described is perfect. But what still happens today is that the large majority of small business owners would funnel their money out of that account to their real bank account. If you were a betting man, what year do you think that shifts? That, let's say, more than half of the business owners keep it on that integrated account.
More than
How quickly will this go?
More than half. That's interesting.
More than half on a software platform.
On a software platform.
What I'm talking about, I think the fundamental shift or the paradigm shift will be when they feel they no longer need what is now their real bank account, but that becomes superfluous.
Yeah. So, it's a great question. So I think, I laugh because I don't want to give you an it depends answer. I think that
All I need is a date,
you
like
need
a
a
year.
date, a year. Um,
Just a guess. We won't hold you to it.
so I'll give you a year, but before I do, I think that it will depend greatly on the value that like embedded finance players can articulate to small and medium sized businesses. Because like ultimately we saw this with neobanks play out in the US and to some degree in Europe and the UK. Like in the US, the neobank Valprop was garbage for most consumers. So most consumers and the banks reacted. Big banks said, okay, we're going to be better. They got a lot better. Frankly, the big banks crushed the neobanks all day at consumer banking. Okay, what happened to neobanks? UK and Europe, that didn't quite happen. Neobanks, I would argue, in the UK had a much greater role. Europe is a mixed bag. So I think there is a major role to play for like EF providers to actually articulate that value prop really clearly to make it happen, right? Because if not, like it's not going to happen. That said, like I think if EF providers do that job well, mid 2030s is probably a fair guess of when we see like real at scale adoption, you know? And the reason I say that is because like the scale of the banking system in the US, less so in Europe. I think, the European banking is a tough place to exist. The scale of the banking system in the US, even on small businesses, which I think are historically worse served than consumer and commercial banking, like it's huge, like, the scale of embedded finance today is versus the planet Jupiter. And so even if EF grows at what I think, frankly, is going to be an extreme growth rate, which it has over the past 5-6 years, like it's the law of large numbers, right? But again, like the direction of travel and the growth rate is undeniable. Like it's a thing, it's happening, it's real. Just think
So what's the number?
2035.
Okay. Well, that's what I would have guessed. Your story sounds a lot more bearish than that.
Well,
I think that's reasonable. 10 years is
yeah.
reasonable. Hey,
Uh,
you spoke just now about the different geographies. I think for me, there's quite clearly the fact that the US is years ahead of the UK, which in itself is years ahead of continental Europe. Is that also what you're seeing? And what have you seen in your experiences? I assume you talk to businesses from all of those locations.
Yeah.
What do you think are the main drivers of that? Is it culture, prior behavior, regulation,
yeah.
digital adoption? What are your thoughts?
It's a good question. Totally agree with you. Which is good because we wrote that in our report together. So
Oh,
I'm
did we?
glad
Oh, that's good.
Yeah.
I'm
No, I'm
glad
glad
we
I
did.
agree. Yeah.
Fantastic report.
Yeah, it's
Yeah.
written by some really smart folks. So I think that the simplest answer is that there is a ton of venture capital money and private investment, and now it's public, right? Like we see it with public players that back the trend in the US around SaaS becoming vertical and horizontal SaaS previously. But like I think US public and private markets are absolutely massive relative to European and UK markets. And the amount of investment dollars for grabs are extremely high. And so I think because of that, we saw the move earlier and faster in the US. I don't think that there's something when it comes to the SaaS trend that has like regulatory climate, or it's easy to say like, oh, small businesses in one place or another were more ambitious or less ambitious, but there's nothing there. I think it's really a dry powder question. I think on the embedded financial.
What does that mean?
It's just the the
English
sheer
is
amount
not
of,
my first language. Dry
It's
powder.
just-
What does that mean?
it's like the sheer amount of capital looking for a dollar of investment return. It's like if you and I
embedded
raised
finance is hot, so let's go. Yeah.
exactly.
Okay.
That's exactly it. I do think like for embedded finance specifically, so that's like the vertical SaaS trend. For embedded finance specifically, I think that the US tends to be like a little more, another Americanism, like a little more I want to say wild, wild west, but maybe open on a regulatory framework basis is true versus Europe. But I think that, where the SaaS trend goes, embedded financial products will follow.
Yeah. Yeah. I hear you. I think there's a further cultural element in Europe where I think there is, I think the American ideal of sort of this individualistic, we're all self-made, the Steinbeck thing of we're all temporary embarrassed millionaires. There's no poor people. I think in Europe there's more respect for institutions. So what I mean by that is I think the trust gap that exists between a software platform and a bank is probably more of a thing in Europe than it is in the US, where the immediacy just wins out. Like, hey, it's better for me. Let's go. There's innovation all around me anyway. And I think if you, especially in markets like Germany, still very cash heavy, there's a Sparkasse, like a local bank around every corner. You trust your banker and you're not quite sure about this techie from Berlin. So I don't know. I love working in this space because there's all of these cultural nuances that creep in.
Yeah.
Yeah, it's very exciting.
I agree.
Yeah. Is there anything in this chat that we haven't touched on? I've very much enjoyed this conversation. If there's anything else you'd like to add or highlight.
Man, it's a $1 billion question. No, I mean, I think it's a fascinating space. It's super high growth. It's interesting. If you're a SaaS platform, I think like the question is not an if question anymore. It's a how question, which is cool. No, I think we've covered pretty much all of it. It's been a fun chat as well. Hopefully we get a chance to open the coffee shop and also maybe write the software that operates the coffee shop for everyone,
That would be ideal. Yeah. Thank you very much for taking the time. And I'm sure we'll see each other again in another context.
Happy to.
With the big picture in mind, let's shift to the platform perspective.
Welcome to the first episode of Adyen Presents Embedded Finance. We are here today with Jakob Carstens of SumUp. Jakob, welcome onto the podcast. Could you kindly take a moment to introduce yourself and perhaps touch on SumUp and its mission and what you're trying to change in the world?
Of course. Thank you, Hemmo. Thanks for the invitation, and thanks for giving a stage also to SumUp. My name is Jakob Carstens. I live in Berlin. I'm married to a wonderful wife and father of one little girl. I studied business and dropped out of university and somehow got stuck in the fintech scene for the last 12 years now. I worked in crowdfunding companies and stuff like that. And then in 2020, I joined SumUp. Pretty much on the day of the first lockdown here in Germany, I more or less reached out to them, or they reached out to me. And that was actually also the time when the product was born, which I'm working on now with the team. That's called the Merchant Cash Advance. That's SumUp's credit product or lending product. And since then, in the last 5 years, we spent some time on building this and shipping it to more and more merchants across the SumUp ecosystem.
And at the time, 5 years ago, can I just ask a question?
Yeah.
What was SumUp then?
Well, it was mostly a payments company. Probably not everyone in the firm would say that. However, it was dominantly known for their small white card readers that you probably the one or the other have seen in a coffee shop or in a small retail store. And since then has heavily developed because it took that path from being a payments company in the first place to being a multi-product company today, where we're offering multiple services, but I'm sure we'll talk about that a little bit later. Maybe to also spend some second on the like history of SumUp itself. The company was born actually in 2012. And back then it was really that small merchants and retailers and coffee shops and sole traders had no good opportunity to access payments themselves. There was a classic market dominated probably by bigger players. and by banks, and it was very hard for them to access like simple forms of payments and get started with their own days. So the idea was born, and SumUp pretty much built a very nowadays it looks a bit stupid, obviously, a small first device that had very few features only, and then tapped into probably a market opportunity that was not so obvious back then, but has developed fantastically since. Well, today we are building not only the hardware and selling that to our merchants, but more importantly, we offer that ecosystem where they today can pretty much access every tool that they need to thrive. This is SumUp's mission, right? That we focus on the small merchant and we give them everything they need to run a wonderful and a growing business. And that's the stage where we are today.
It's really interesting. Thanks, Jakob. And how small is small? Like what order of magnitude should we be thinking about?
Well, we are starting with sole traders, right? Like in my job, I from time to time I see merchants who tell us their story why they use the capital product, and we are starting with hardware installing people that just when they have installed, I don't like a new floor at their customer, they directly check out using the SumUp hardware, and they run a sole trader business. Everything, their revenue is what they do on a day to day.
That was going to be my question. Like, what's the ceiling in your product market fit currently?
Well, the bigger the merchant gets, the more difficult. It's a bit hard to really define a cutoff because we do grow, or our aims to grow with the merchant, right? Really from being a sole trader, going the full story from the sole trader maybe hires a few colleagues, and then they are multi-person and at some point multi-revenue business. We could still give them the tools, and we aim to give them the tools. Probably more in the hospitality sector, where we then offer multi-waiter solutions with like smaller devices for order management with our POS softwares and stuff like that. So we even go into enterprises, right? So a couple of delivery companies are customers of SumUp, where they are giving the small card reader for their delivery men and women, and they can then, if they have to charge services at the end customer, they are using SumUp as well. So the range is really like from one-man businesses or one-woman businesses to full-scale, large enterprises.
That's really interesting. It is then how you go to market a bit more agnostic, sort of like we'll put it out there and see where it gets stickiness, or did you very deliberately go like, okay, it's going to be this type of merchant and we're going to go after them? How did that work?
Yeah, that's a good question. So obviously it's easier to reach the mass market, like the very small ones, via traditional marketing channels, where we have done a lot of brand and we do a lot of out of home, and are just well known as a brand by brand recognition, I would say. And then the more difficult it gets, the more complicated also the use cases, the more we do a hands-on personal approach. We have obviously a bigger sales team now, and we go up the ladder until like doing classic enterprise sales with the team that is around and is serving these bigger clients. So we try to do all at once with, I would say, a customized marketing and sales approach.
Okay, so it is a bit segmented in how you go to market depending on the size.
Exactly, yes.
All right, so you started in payments with a small device fit for a micro merchant. Now you said that we go up market all the way to enterprise. How has your sort of payments offering evolved along that journey? What was the sequencing?
Yeah, so we pretty much started with what we called an Air card reader. Talked about it earlier. That was really just a very simple card reader with like very, very basic features. And after that, like obviously it was about rolling that out, bringing that to the market, finding some merchants that would use it. And I think for a couple of years, we were pretty much focusing on just getting this done, getting the hardware in place and getting the obviously the payments stream in place and stable and scalable and everything like that. And then I think very soon we already realized that if you would only do payments, that's not really the offering that our merchants need, because they actually got to us and said SumUp, we love your card reader, but can you please also give me something where I can put my my revenue on, my a bank account or something like that. And then we build a bank account and offer that the merchant can now put the revenues they do on the SumUp bank account. And then they said, oh, now I want to spend my revenues. Can you also give me a credit card? And then we said, okay, let's build a credit card as well. And then they said, okay, can we now do also cost management tools? I want to split what we're doing or what we're spending our money on, and would have a clear overview. What do I spend on stock? What do I spend on my salaries? What do I have to put aside for tax and so on? So we're very much a listening company and taking into account the feedback that we get and build then stuff like that. So after bank, we started to give them additional tools for team management, invoicing solutions. We do sales reports. We have a big team that is really focusing on merchant analytics, so that we give the merchant the right analytics tools, so they can draw and pull sales reports. They can pull product inventory, product success, I would even call them. So it's a long history. The range is not stopping there. We do payment links now if merchants want to accept payments also without a hardware device. We recently launched self-service kiosks. It's a really nice feature that merchants can use for, you probably know it from McDonald's or stores like that. And that is now available for the coffee shop around the corner, right? So on an affordable price, the technology is there. And that's, I think, how it widespread. And then at some point, the product that I'm responsible for, the credit product, joined the party as well 5 years ago and is now available to most merchants in our major countries.
That's really interesting. And before we get to the credit bit, I just want to talk about, you just said you led with hardware and then came through listening the other solutions, so banking, etc. That's interesting because normally you see these horizontal SaaS providers start with a bank account and maybe a card, and then, oh yeah, these people need to accept payments too. Maybe we'll give them a terminal, but you did it in reverse. But on that listening specifically, you said we're a listening company. How does that work in practice? How do you collect all that feedback? How do you prioritize within that stack rank? How does that go?
I would say maybe for me also, when I joined SumUp 5 years ago, it was really a learning curve from more coming a background that was maybe a bit more, I would say, business driven, to a company that was so merchant and product driven, right? So I think it starts with how you set up the company in its organization. So we have very independent team. So the credit team that I'm part of, for example, barely, for the good or the bad, we don't know, barely interacts a lot with other teams, right? I don't have to go to the CEO. We don't have to go to the CFO every day to report or to ask, can we do this? Can we do that? We have a very clear mission. We have set our targets, and that enables us to really focus on our product and build the best credit product. Obviously, we have to listen to the rest of the company to connect and make sure that we are benefiting from the services that we get from there. But I think it starts with independence. The other piece is obviously about being open and talking to the merchant. And there I would say SumUp definitely stands out in customer service, has always been proud of its great support team and how we are able to also transform from what we get there as feedback or as also complaints and turn that into product features very soon. And I think the credit product actually is a good example for that. And obviously we do the full range of customer research, we conduct ENPS surveys and make sure that we are staying on eye level also with competition, just by what merchants tell us. When they do their own research, they can easily tell us, okay, I now know what, if I go to provider X, I would get that, or you don't have feature Z. can you please build that, because otherwise I'm about to churn.
So most of these are just really qualitative one-on-one conversations of you reaching out.
Many of them, I would say, is a combination of all of them. That's put it together, and then obviously looking at the market and making in the end, I think that's the smart way of conducting or building a successful fintech company, right? Is to make the right decisions at the right time, and what order you would want to ship what products, what is really necessary.
Exactly. Okay. Switching gears then to your area of the business, credit, what we call capital, cash advances, loans, etc. You just said when I joined, this is sort of the start of it all, and your ascension of the company ran in parallel, I think, to the growth of this part of the business. Was it just as simple as you realized, hey, we've sold tens of thousands of small terminals to these types of merchants. They're often cash constrained, live in low margin verticals. They need cash. We can offer it. Or how did that calculus go? And when did you decide to really take it seriously?
Well, the story is actually that in 2020, in the first lockdown, SumUp realized that it should have probably built the credit product a little bit sooner than that, because very soon, obviously the revenues of SumUp merchants were tanking, right? So there was definitely crisis mode in the company. It was a coincidence that I was looking for a new opportunity back then, and then I was happy to join the team. And unfortunately, I joined a few weeks too late. So the first loan was already issued. The first cash advance was already paid out to the first customer. But the story is still, lockdown happened in the UK, or we were pretty much screening, okay, what can we do? The first idea was actually whether we would work with government funding, because there was obviously a big thing during the lockdown when the governments wanted to push money into the SME market and more probably even into hospitality and retail businesses that had no chance of switching revenues onto an online stream so quickly. So we were looking for opportunities, and then quickly realized, okay, it's much faster if we just build it ourselves. And the merchant cash advance pretty much was the most logical product, right? Because it's so close to what we're doing in payments, because it is like using two aspects of it. It uses the payments data for underwriting, and that enables us to do pre-approved cash advance offers to our customers. And it uses, on the other hand, the payment technology that SumUp had put in place to then facilitate the repayment of the cash advance. And that works that we are deducting a small percentage of every transaction that the merchant does until the outstanding debt has been paid. And both aspects, also having seen different loan products in my past experience, enable SumUp with the cash advance, pretty much everyone else in the market that is doing payments, but the cash advance pre-approved and then conveniently collected is like the best loan product I could imagine as a merchant. It is pre-approved. You don't have to go to a bank. You don't have to submit paperwork anywhere. Credit scores are being ignored because they don't matter, right? Because as a payment company,
you see that they're creditworthy. Yeah.
Exactly. And that's just,
you take out the human error in repayment. Yeah, it works well.
Exactly. And we sit on top of the revenue stream of the merchant as well. That puts us in a prime position, obviously, even in a non-secured, no guarantee lending setup that we run, to still have some form of guarantee, even if it's not like a written or something like that.
And then as your loan book grows, did you start offloading that risk, or how do you look at that?
Well, offloading, I wouldn't say. We brought in a partner, a US-based
share the risk
investor, exactly, that is joining us and is just bringing in, what I would say, a bigger pool of money that SumUp was just not focusing on putting on its own balance sheet, I would say. So we preferred staying lean and benefiting from like the better economics if you work with a partner that knows the product well, and knows also and brings in some experience that even helped us a little bit in refining risk here and there. So absolutely. That partnership is now in place and helps us.
Did you see also an evolution then in the average ticket size of these loans, or what your maybe risk appetite was on how high you could go?
Yes, definitely. I mean, we started with the maximum of £2,000 in the UK in 2020, which was like just the bare minimum that we wanted to do, and also
As just
it
to
covered
stay
our
afloat, or what was the business case? Sorry for interrupting you, but I'm just curious, like, was it that was just to stay afloat during COVID, or?
Exactly, just give a bit of like a helpline to merchants. And in the first days, obviously, there was a bit of like playing money for us as well, just to see whether the product works in regards of merchant acceptance, where we obviously during the COVID lockdowns, we got a phenomenal response. And then also in repayments and payback performance and like loan book or return performance. That took a bit longer, obviously. A loan book always takes some time to mature and give you the feedback that you need to then refine your credit risk models. Since then, we have increased the average loan amount. We're doing up to 15,000 pounds and euros in the countries where we are live. And so we can serve also bigger merchants and also different use cases.
That's really interesting. And did you find also in your in the early performance that people who had just paid off a loan, that they immediately take a new one? Something we're seeing in the
Yes.
industry.
Yes. I mean, this is again, like I'm the biggest enthusiast of the merchant cash advance. Also from a marketing and a growth standpoint, which is my job in the team, right? It sells fantastic. So we see really high adoption rates in the countries we are live, especially in the UK, where it's a very well-known concept, the merchant cash advance as such. That works very well, and repurchase rates are higher than 80%. So we can tell we are onboarding merchants on a good conversion rate we're happy with, and then we're keeping them in the loop and they're taking a new one. The use cases, actually, when we talk and interview merchants, it's really interesting, are very different, right? So some people just benefit from it as a buffer that they want to have. They are maybe not even using it on a daily basis. They just like either to have the money on the account already, or just having the assurance that they would have the cash advance easily available, because all they have to do is go into the SumUp app and do
safe.
3 clicks, and then you have the money on the account in less than 2 days. And that is like really help money for use cases. I love this story of, we have a fish and chip store. I think he got his 5th cash advance now. And in the first instant, it was pretty much on a Thursday, his fish and chips machine, his fryer was breaking down, and he had to save the weekend business. He had to buy a new one. So he went to the SumUp app, put the money, got the money on the next day, went to his local dealer, got a new fryer, and the weekend business was safe, right? So these are the use cases that we see a lot, where I think you can't compete with the availability and the convenience that you get with this capital product in the SumUp app.
No, I mean, there isn't really a competitive product to that. The immediacy and meeting the need at the point where he's already doing business.
And if I may, obviously, like we have always this, it's a bit of this philosophical question, right? Would you run this as just an injection into the ecosystem, where you pretty much run the product as pro bono, or would you make it its own like revenue contribution product? And we are trying to find a good middle ground between both. And obviously the product is not cheap, right? Because with like having that, even with having the payments data, you do pre-approval, but you are still having a lot of unknowns that you would capture
risk.
if you would do credit scores, if you would look on the balance sheet, or if you like ask additional questions that would make the product more complicated. But what we definitely see is that merchants tell us, I'm aware it is not cheap, but I'm still willing to pay a little bit of an extra, a little bit of a premium compared to me going to my local bank and asking for a loan, which took me maybe 2 weeks, and I spent hours on submitting documents. And so I would say it's a business decision, it's a priority decision, and we are happy that often we being considered as a good and competitive offer against other alternatives, at least for the use cases that we just talked about, right?
Yeah. And when it comes to sort of the immediacy of funds and it's kind of also a credit product, of course. How do you look at faster payouts and same day payouts? Like, how does that fit into your ecosystem and your vision?
Yeah, that's an interesting topic. We saw it in lending, obviously, right? That merchants said, okay, the sooner I get the money, the better it is for me.
Yeah.
And we saw the same then on the card reader, right? So historically, we always had a bit of a delay there. And then at some point we could roll this out, and we are obviously enjoying the partnership with Adyen in this case, where you're helping us to ship this product and make this available to merchants as soon as possible. And that is a feature that merchants asked about and that they are now benefiting from a lot.
Do you see that? I mean, there are obvious synergies between the two, right? If I'm operating a small cafe, I need my cash quickly, whether I'm paying out sort of tomorrow's deposits now and I'm giving you some basis points for that, or taking a capital loan. Do you see any cannibalization there, or do you always want to offer both flavors?
Well, I wouldn't say cannibalization is a big issue in SumUp. As long as it helps the merchant, right? We are happy with offering it. And then, like, if they tell us now, I'm happy with getting my money in the first place and immediately, and I didn't need less capital products because of that, then we have to build better capital products. It's a good competition to have, and it's good that this sets the pretty much the benchmark of our speed to ship money.
Let me ask it a slightly different way. If you see behavior, for example, from a user taking out a lot of small ticket credit products, do you then suggest to them, hey, for your use case, it might be better to just go to faster payout scheduling or something like that? Or is it more like, hey, we've got this and you pick and choose what you want from the menu?
It's interesting. I'm not sure whether we do this analytically driven, like if a merchant does that, let's offer also this, or at least not in a manually written guidebook or something like that. We have in our CRM engine that is now fully AI enabled. So it might actually happen even if I wouldn't be aware of it. So that our engine tells there's just this merchant behavior. Lots of merchants who benefit from instant payouts on their card reader revenues also are interested in cash advance offer, or maybe it's the opposite and they are not or less interested. I actually don't know. It's an interesting point. I should look into that.
That's I think you sit on a lot of data, obviously, but equally there are so many tailwinds in this space that you don't. Maybe there's no urgency around that either. Hey, I want to switch a bit to geographies. To me, having being Dutch, living in Amsterdam, you've been ubiquitous for a very long time. Though it feels to me like a distinctly European offering, but I believe you're now active in well over 30 markets. You're huge in Latin America and the US and in Europe. Is this an offering that you think will fit everywhere? We can see those little white devices all over the world, or how do you look at sequencing your geographies and picking out the margin pools?
Yes, a good question. We are very, very proud of being so successful in so many markets. And I would also say in hindsight, and not having been part of the full journey, but still it is impressive to see how the different use cases also make different countries differently successful. Right. So just to give a few examples, obviously in the UK, I would say it's a bit more credit card heavy country now. That is just probably a bit more financially developed, I would even say, than other countries. There it was kind of, I don't know, obvious that SumUp would be successful. But when I joined, I didn't expect SumUp to be so successful in Brazil, where you have also a huge scene or a huge economy that is based on small merchants. And you have also big motivation from the government to increase card payments. And then putting this together, you have just a young and highly developing citizenship, or like people who live in the state and who use then credit cards on a daily basis. And you see how a market is growing and how we are being part of that. We are looking into new markets, and we want to launch a few new markets in still this year. So the roadmap is never stopping. But also something that I learned probably more when I joined SumUp is obviously that payments is a heavily regulated play. You at Adyen, you know this better than me, and that it's not only the decision on when to enter a market is not only driven by what we think is the economic value, but also what is the feasibility from a regulatory perspective, and putting both together pretty much then sets the agenda of how could we enter a market. Do we do it with a partner? Do we do it ourselves? Do we apply for licenses and so on? What hardware would we use, and what products would we then be able to start with?
Yeah, I mean, very similar motion to us. And on the credit roadmap, does that follow payments quite naturally, or do you do your own sequencing because of course the rules and regulations are slightly different there, not just geographically, but also compared to payments. So how does that go?
So until now, the lending / credit offer is only available in countries and to merchants where we are already live with the payments product, at least, because that is the only way how we do the underwriting for our credit offers. And so pretty much the roadmap is set by where we are live with payments. We can also offer credit. Then very interesting, you are at this classic chicken egg challenge. Do you offer a credit product because it is so heavily demanded in the market, even if it wouldn't be worth from our prioritization standpoint? Because the market is obviously very small, right? Let's assume we start in a new country tomorrow and we have like 10 customers, and each of the 10 tells us, I actually need lending because no one else is giving me a loan. Can you please also enable your lending offer? And then we would need to think, okay, how can we find a way in a new country also to offer a lending product, maybe in a way that is different to our classic setup that we already use in the countries where we are live. So we are looking into all kinds of partnerships as well for lending, where we are either like using regulatory setups that would put us a bit on a speedboat to make it available sooner than if we would do it completely ourselves, or that we even consider to have some markets served completely by a partner, so where they would take the credit risk as well and would take the underwriting decision, maybe because there's a local partner who already knows the market and knows what data points to look at, and maybe also would just be then in a better position to do better underwriting that we could do in a foreseeable future. And if we then think it through, it would be better for us to go with the partner. We would probably not get the full upside in revenue, but we would probably get a bit of a referral commission or something like that. But last but not least, the customer would be in a better position because we could, instead of SumUp going very slowly and ramping up a market and testing the waters, developing and refining credit risk models, we would have a partner who would be all in from day one. And we could then very quickly scale and go along, and pretty much every payments customer who's interested in lending could benefit from the offer of having such product available soon.
I mean, that would also increase the stickiness of your product. So you'll make money elsewhere, even if it's not entirely in credit. And you spoke earlier about you being a listening company, and you're building out this suite of products and features for these small business owners and increasingly mid and larger business owners. I think philosophically, what I hear is you're trying to sort of become the operating system or the command center from which they run their business, right? You've got the analytics, you've got all the channels. If you look ahead, sort of the rest of the decade, is there anything you're particularly excited about developing, or that you think like, hey, this is really gonna be the end all that solves their needs? Is it gonna be something related to AI? Surprise me.
Well,
AI will play a role in there, but I think until the end of the decade, we are still talking about millions of merchants doing daily business in a hopefully physical and offline world, and or in an online world where they can also use SumUp. But predominantly, we still want to go buy our shopping, and I wouldn't, or do buy a coffee, and I wouldn't want my AI robot to do that for me. And even then, there will be some form of payments that the coffee shop would need to accept. I think for us, it's more that grand vision that we want to grow with merchants, right? So how else can we develop more products that are close to the journey of once a sole trader, now a 10 people business? What are the different needs, and how can we still serve it from day one to being in the market for a couple of years and growing? And the other aspect is about closing the loop. So maybe less known, but yet popular is the SumUp Pay consumer app that we are offering, where you get a free credit card, a virtual credit card in the app, and you get a cashback, and you can do pretty much your expense management and so on as a consumer. Obviously, that's a nice play as well, and we have seen that with other players in the US already, right? If you can close the loop between the merchant side and the consumer side, you're also then benefiting from some better economics on the payment networks, as it would pretty much be SumUp moving money from one end to the other end, but still in the same pool of our realm and what SumUp has under control. And that is, I think, the other path that we will double down on, and that we're seeing good traction already on today. It's really interesting. Is that limited then only to markets where interchange isn't capped, or do you just see that as a lesser opportunity but still sizable for that product?
Well, I wouldn't say it's linked to interchange and or pricing in general. I would say it's probably not even the biggest motion. It's just that there's, even from a data perspective, right? If you can connect consumers with merchants, I think this opens up so many opportunities of services to merchants and services to consumers we are not yet even thinking about. Now
In the realm of loyalty, or what are you thinking?
Exactly. Loyalty is another product that SumUp is offering. We acquired a company there, I think it was now 3 years ago or 4 years ago. And that is now available to all SumUp merchants, that pretty much even the independent coffee store around the corner can run a loyalty product, and it could then target these merchants probably on the consumer, could target their consumers on the consumer app. Stuff like that is then possible if you have links to both ends.
Really interesting. Thank you for sharing all that with us. Is there anything we left out of this conversation that you'd like to share with the audience?
No, just maybe a recollection of what we briefly touched base on, right? Building or shipping great payment products to merchants is obviously the tip of the iceberg. Always looks like a shiny app or a nice hardware. And when I talk to my friends, where do I work? I work at SumUp. They say, yeah, I know the card reader. I think what's below the iceberg is this big compliance game. It's a regulatory game of getting this in order and finding the right setups that enable you to run this whole thing. And that is also a bit of my takeaway from our time so far at SumUp, that running this is it's a hugely complex task, and doing it right, I think, is what is really distinguishing a company. And when I think about Adyen, and when I think about SumUp, and when I think about the other players in the markets that have made it to that size, I think that is really what is making them stand out, that they have played this in a smarter way and in a better way and in a more reliable way and in a scalable way.
Maybe that's why we work so well together.
I guess that's the reason. I see like there's so many touch points, and like whenever I talk to the Adyen team, I see how many products they are shipping. I know you have also built a speedboat with your capital product. I think that is interesting, and so far what I saw, I think it's like a logical connection as well, right? So and I mean, Adyen's success speaks for itself, and we are happy to benefit from the services that we do connect to and that we can benefit from. And from there, it's just inspiring to see how everyone who is working in the space has access to the vast amount of data, is leveraging that data and is then able to build better products or is offering additional services.
Definitely. I have a bonus question. I'm sorry. We were not done.
Go for it.
Since you, maybe not from scratch, but you played a large part in building out credit at SumUp, what advice would you have for prospective founders, building a software platform, whether it's a horizontal play like SumUp or a vertical play for something very specific? Like, and then not broad strokes, but just think about the sequencing, but like the hires you make, the markets you target, what products you offer. Anything you learned that you really felt, I hadn't expected this going in?
So many dimensions, so a bit hard to cut it short. Maybe let's focus on a few points. I would say one is definitely the markets that you want to operate in. And as I said, right, it should always be a combination out of business value or economic value and customer demand with what's the regulatory setup. So how can you build a product that is selling well because there's customer demand for it, and still you're not going to jail or you're paying high penalties to a local regulator? That's one. I would say then, like, once you get closer, and if you work in the fintech space, you definitely have to set up a proper and reliable and highly functional compliance and regulatory team that is covering that aspect. Because that in the end will make it easier for you to ship. I would then say, well, once you realize how difficult the regulatory challenge is, make smart decisions on, do you build it yourself or do you work with a partner? And there are so many partners outside, right, that do embedded finance in one form or the other that and helps you get to market much faster. I think at least for the beginning, that is always a good idea. And then, well, yeah, what we also talked about, right? Like being customer centric is easily said, very difficult to maintain, and to keep an agenda that is inspired by customer input and by customer research and is customer centric, but is not like going after the customer, as with this famous quote from Henry Ford about like customers asking for faster horses instead of for cars, right? You have to somehow put in a little bit of intelligence yourself and then make the right decisions of what you put in place or in front of the customer, because they would not explicitly tell you, but you then will need to like have a bit of creativity and come up with the solution that is really standing out. And it may be a nice looking payments device that maybe no one also expected, right? Like to finish off with that, it's really that it's such a remarkable brand icon now for SumUp. We could probably produce some merch and would even sell very well, just because people love how the SumUp card reader looks. So maybe that's then the last
cult following.
piece. Exactly. You need to look good and have something sexy on your product, something that is really having you standing out.
Let's end on that. Thanks a lot, Jakob. I enjoyed this one. Appreciate
Thank you, Hemmo. Thank you for having me. Thanks.
Thank you to our guests for sharing their insights. There's lots to digest from today's conversations, but if you take away one thing, let it be this. Embedded finance is a proven opportunity, and it's still growing. Platforms can act now and still have a first mover advantage in the markets wherein they operate. Thank you for listening.